at the PDAC is Alain Corbani. He's the head of commodities at Finance SA. Alain, welcome back to our show.
Thank you very much.
We spoke last November, September.
It was in the city. It was in the city. It was in Toronto.
Right, in Toronto. But things have changed here. Right. Things have definitely changed in the gold market here for the better. And we've had a rally since the start of the year, some off days, of course. But do you think we're in a better place now than we were 6 months ago, Alain?
I like the term place that you are using, because this is really what it feels. It feels like suddenly back at the end of last year, if you remember, we were talking about normalization, about rates, and the strength of the US dollar, and all this was sending mixed messages. And suddenly, the Federal Reserve, that was at the December, January, started showing some signs of willingness to be much less aggressive. So finally, the picture is much brighter. It was already 3 years ago, because this is when the gold cycle started. But then you had this misconception of where are rates going, and where the U.S. currency going, what is the U.S. growth going to do, what's Europe is...
What are your views on rates, on the Fed?
My bet, and so far it has been the safest, is to follow what the Fed is saying. So basically they are saying we are not going to raise rates anymore. They are saying that they don't see really a threat on the inflation front. So bottom line is real rates will stay where they are. We are going to have a little more inflation maybe, and deficits, twin deficits, high debt to GDP. I remind you, the basic ingredients for gold to perform means lower U.S. currency, and that means a higher gold price.
And this year we're actually seeing mining stocks outperform physical bullion.
Yes. And they have.
So
depending where you start, because everybody is worried about comparing 2018 itself, 2017 itself, and then. But if you look at the cycle, the beginning of the cycle 3 years ago, that's when gold started going up, reverting its trend. This is when you have to start your analysis, and the analysis says gold up 16% and gold mines up 45%. So we are fine. Everything is...
You're feeling good.
Oh yes, absolutely.
You're feeling good. And despite... Well, not despite, but there's merger and acquisition activity very alive in the sector right now. Is that a good thing for you?
Frankly, it doesn't affect me, except when I own a stock that is being taken over, and that boosts the performance.
But for the industry as a whole, do you think it's a good thing?
I don't care. I don't know why people want to see M&A. I don't. Back in 2013, that was the start of a major restructuring of the industry. Did we need M&A to cut costs by $200 the ounce? No. The message was very simple and clear back then. It was focus on profitability. We don't need M&A to focus on profitability. We don't need M&A to reduce the debt.
They just want to see it more streamlined, less redundancy. I guess in the case of Barrick and Newmont, if we look at, in Nevada, it's basically a fence separating that property. So it's kind of like, well, let's just join them together.
Okay, so if we talk about this 1 second, I definitely supported the Barrick Randgold transaction. It made a lot of sense. Two people, different profiles, complementary, good, stamp on, we move. The Newmont Gold Corp made sense. The logic, the way the management has described it was, we're not merging to grow, we're just merging to be more profitable. You don't need, more reasons to evolve for the benefit of the shareholders. So going to war, that's what they are doing now, the Barrick and Newmont. Going to war just to what? For a fence between Nevada. And we get rid of the Australian assets, and we get rid of the other non-US asset. I think it's disruptive, and I think it's destructive. I don't think that it's value value driven.
Alain Corbani, thank you so much for joining us here at the PDAC. Always happy to have your thoughts and to have you on the show.
Thank you very much, Daniela.
And thank you for watching. We'll have more for you on Kitco.com.